All right, let's do a little microphone test here before we get rolling. Gonna get the music under control here in just a moment, but let me know if you can hear me okay. Microphone appears to be working. Had to redo my setup a little bit here, so let me know how that's going in the various streams here. YouTube especially, as this will be the public stream, and I want to make sure that the recording has my voice on it, of course, and everyone can hear me. All right, so we're going to get this show on the road here. Probably going to hear some microphone creaking and moving around. My apologies today. Had to redo my setup a little bit. Been under the weather, a whole bunch of different stuff. So, all right, let's roll right into it. And we'll start taking a look at markets and all that good stuff, huh? If I can get the right keys up on the screen here. Hello and welcome to Landy's Crypto Corner. This is our Friday market analysis where we'll take a look at Bitcoin on the longer and shorter term time frames. We might as well start with the shorter here in a little bit, but and take a look at this most recent bounce off of support. And then we'll roll into looking at traditional markets. Dixie's a big one. And we're going to look at, to kind of roll it back a little bit, we are going to look at the pivot for the weekly on CME coming into close today. Remember, it does close after traditional markets. So we'll take a look at that. We'll look at traditional markets. We'll look at Dixie, and we'll take a look at gold as well. And yeah, let's just roll right into it. You know, Bitcoin had a nice bounce here off of the support area. And just this is not the volume-based chart that I typically have been showing that we put together live on the streams. This is just the prior lows. So wick low from the lows on the daily are in yellow, and then the 4-hour wick lows are in teal right now. And we can see that earlier this morning, in the early hours for me, but I was awake, as it was starting to reach some of those volume-based areas that we'll take a look at in a moment that we charted in the last live stream for the move up. But in this case, we can see that Bitcoin basically threw one wick straight through this last higher low on the 4-hour, right into around the daily. It swung that daily close area on the higher low and popped right back up. Now, there was some edge to be had here, and I want to point this out as it was a topic of discussion amongst some friends of mine. And in this case, we did see in the prior 4-hour close that it closed above the upper first standard deviation of the Bollinger Bands after holding the lower first. This is one of my favorite setups. In addition, it set a higher low, right? So because it set this higher low right there, this was the previous higher low over here at around that 28,160 area to around 28,200 or so, 200, 300. And then it came right back down, set a nice higher low. This higher low came on bullish divergence, so we had a drive of bullish divergence, and we can see that it also had a momentum turn on that close. In fact, that was it was still pointed down. What was it? In the early goings when it opened, it had an initial cross to the upside. For the 4-hour, that's what it was. Now on the 15-minute, this was clearly looking a little exhausted to the upside, as we were coming out of this short-term consolidation down here. And we can see that we had this nice consolidation, moved up to the upper second and third, bounced off the lower second and third, started pushing back up the upper second and third, and then it was trending on top of the upper first standard deviation, gave another poke at the upper second, came down to the basis, lower high, locked in on this candle, very next candle, dumped through the support here, right down to the 4-hour low and the daily low. Got a beautiful reaction because it was against the current trend. If this was going to fail, you never would have seen it even try back up, and or it would have tried up for this last lower high and then failed. But it pushed on through and continued up. Now it's playing around this prior high at around 28.1 to 28.2 or so. And that was the warning right there, that there was, at minimum, there was an opportunity for this to head down and at least test the rest of the range down here. So this wick low to this close open wick low area to the next low, and then of course the actual 4-hour low. And there's low side structure down here. Now I do want to point out another big thing to understand here when we do go back and take a look at that volume-based chart that we have built for the way up. And remember, the volume-based chart is a volume map. So it's a map of all the highest volume closes and wicks for the move up in this case. So let's go ahead and get rid of the Bollinger Bands. And what we can see is after the move up and the deviation above, right? So we have the move up from the low. We had the trend shift. We mapped all the big high volume areas, all these nice peaks. We mapped them out. Yellow is close, white is the wicks. And we can see that after we got the deviation, we came back down to basically base on the initial breakout region. So this was the breakout candle above here. And we saw some consolidation, came and back tested this high. Consolidated up and sideways, and then we had a nice breakout above this area right up there and then put in the highs. So this breakout candle, or this big bit of volume here, you can see where the low came in and set that low there in terms of volume as well. So we had the high set here, came right back down, tested the wick, tested the close open, and even the wick. There's another wick in there for another high volume bar. And it basically tested once, a big consolidation test. This test missed. This test didn't hit. So there's a third test right there. So one big test, big consolidation test. We have a near miss. And then we have just the upward move to test this close open up here. I'm sorry, the wick high and close open up here. We saw the close open get tested here. Let me actually adjust this, make it a little bit bigger. And let me, of course, not have TradingView respond the right way. All right, so we had the test of this close open right here of this big, nice high volume bar, or inefficiency in price. Basically, shorts getting blown out and not finding liquidity until we hit that 28,600. Which, how long was I calling for that one, huh? We saw the back test after the breakdown, and then it came down to find support on the prior high breakout area. Came back up, gave it a retest, tested above, swung this area, came back down, and now has retested again, and it's right back in here consolidating in between the close open of this candle. This is literally the close of the candle to the wick of the candle, and there was some consolidation there on the way up and on the way down. So, pretty straightforward range plays right now, and not too much happening. And often when you see this kind of price action, it's probably better just to sit out, to be quite honest, unless you are very dialed into what you are going to be trading and why. If you're trading anywhere in between this high volume area and this high volume area down here, you're probably going to get chopped up, to be quite honest. So realistically, if you're going to look for the short side of things, you're going to look for this area to fail and then not, and then back test. You're going to look for, man, this is not working well today. I hope the stream's okay. You're going to be looking for this area to fail, a back test, and then down, right? and you're going to target one at a time these highs on the way down, or whatever the time frame is that you're interested in trading. For the areas of support and resistance, take the highs first, to the lows second on the way down for setting take profits. Make sure your risk to reward is at minimum a 1.5. I mean, that's typical, that's standard. Some guys do 1-to-1, but I would say minimum 1.5. As you know, the value proposition for the volatility is going to be much better for something like Bitcoin. All right, so that's kind of the basics of what it is that occurred recently. Now, to kind of deconstruct, some of you might have seen the thread I had commented under a breakdown of open interest that Credible Crypto did on Twitter. And, you know, I didn't want to step on his toes. He's got his take on open interest, but I kind of went in a different direction to take a look at funding. And funding is kind of doing what I call a whipsaw. It's negative to positive, so on and so forth. And this is very indicative of positioning. This is positioning, and what we have seen with this is it's primarily positioning, or was positioning, long on coin margin contracts and short on stable coin margin contracts. So it was pretty much negative. I mean, it's fairly negative across the board here. It's barely positive on BitMEX and Bybit. Kraken's the only one that's even pushing 0.006% here. Others are negative. I would ignore the predicted rate because it does fluctuate so quickly, and it doesn't really update until closes come in. But what that was telling me is there's a lot of coins being sent to exchanges right now. They're being levered for on the long side of the market, quite frankly. It's when you see positive, which it was, you know, they've probably come out of their positions a bit at the highs, take profit, stuff like that. So you will see it flip. But if you see a lot of coin margin in the positive funding, and you see a mix and or negative funding in stable coin margin, that's typically a bet on coin margin long, and then a hedge on USDT or USDC or whatever stable short as open interest rises. Because the idea is if it flies, you just let the stable coin margin short go. You let it go up to the next level, and then you re-enter those stable coin margin shorts. When it does retrace and you take profit, you then buy the asset on the other side, in this case Bitcoin. You buy that and you use that to keep funding that long position that you're building in the coin margin side. This is essentially a poor man's way of doing options, okay, with no expiration, of course. And excuse me while I adjust my chair, but that's basically the long and short of it. Sorry, I had to say that. Anyway, all right, let's go ahead and get rid of this chart for now. The volume-based chart. If we have questions on that, please let me know in the various chats, and I will round back to it. But for right now, we're going to go ahead and look at the Bitcoin in 60 seconds chart. We've been nailing it, just about every damn move. Excuse my language, but and this is not to peacock and like, oh, look at how good of an analyst I am, this and that. No. In fact, it has nothing to do with my analysis per se, and more to do with just identifying areas of interest. Because either way, you're going to be right if you've identified the correct areas of interest. All right. It's not hocus pocus. It's not magic. Anyone can do it, including you if you're new. So when we look at, it's very, very simple stuff. Very, very simple stuff. When we look at me struggling to find the right tool to get the arrow back up here, we can see that, above 27.5, the next big area of interest is the weekly. And so we've got above the daily and the upper first, which happens to line up with that. So this would be the upper first of the Bollinger Bands at 27.5 above there. It's more likely to go test the upper second, which is right at the weekly. This is not rocket science. Don't overcomplicate these things, please. Just identify the key areas. You got closes, you got wicks, you can mark them. And when you do, you're going to find that they're going to be confluent areas for volume. They're going to be confluent areas for price action to head to once one area is taken out. It's just the way that order books works, the way that liquidity works, it's the way that supply and demand works. In this case, above $28,000, I would expect at least a test of this high over here at 28.6. And I think this arrow, it's 4 pixels, but it still looks, I think because I've been using the different program for the Bitcoin 60 seconds videos. Maybe that's why. But 28.2 above there, I would expect a test back to this daily at 28.4 to the wick high at 28.6. And you may recall that every time I've ever pointed out this daily level, I've always called it 28.4 to 6. And you might wonder, like, well, why didn't you just mark 28.6? It's just cleaner to mark the 28.4. And the main reason why I've called it out as a range is because of all these prior wicks on the prior consolidation and the run up back in April. So that has been my 28.4 to 6 area the entire time. All right, so above there, I would be targeting this low over here. Very, very simple stuff. All right, don't overcomplicate it. We get above this wick, you target the main dailies above it at 28.4 to the most recent wick high at 28.6. If we do see, price action start to trade above the 28.6 and especially close the daily above there, then you're targeting these wicks on the lower term timeframes to the close open on the daily at around 29K above there, 29.4 to 5. That is wicks. Those are wicks. That is wicks. Man, I want to just butcher the English language today. But it is also, there's an area over here that it's actually confluent with from the move down. But it is this close open right here at 28,536 or so. And there is a wick low when we passed it. So I marked that, and that was defining that range at the top, run up to 31,800, that nice big area overhead. So Bitcoin is showing signs that it wants to keep testing this weekly, and there's nothing bearish about this yet. All right. So the criteria has to be very strict when you're looking at bullishness and bearishness. This is an uptrend. The trend is your friend until the end of the trend. All right. And you may remember me saying this. There's another saying that goes with that. So you have the trend is your friend until the end of the trend. And when the trend is unclear, everyone's in fear. Well, the trend might be unclear on lower term timeframes, like the 15-minute. Excuse me. I'm still getting over the last of this whatever the heck I've got going on. This trend is unclear. It's in a higher term time frame uptrend, but it's just chopping around and going sideways. You've got a downtrend, and then you've got an uptrend here, and then a downtrend here, and an uptrend here, and then it breaks the trend, but goes to the other side, just swings to the other side. That was a lower second standard deviation of the Bollinger Band tap, by the way. I remember because I took a nice scalp off of that area to that top side of liquidity. But everyone's in fear on the lower term time frames, is my point. So when the trend is unclear, everyone's in fear. But that's because you need to go up the time frames and take a look at what's going on. And it doesn't take long to look around and find out that we are in an uptrend on the 4-hour. We're in an uptrend on the 6-hour still. 8 hours, yep, still an uptrend. And 12 hours still an uptrend so far. And we're talking closes here. And, if this does break out to the upside and seek out some higher prices, what this would be is just a kind of what, you might hear guys call it a complex low. And, but it's just another higher low, right? I call them consolidation lows. Some guys call them complex lows. I think if you just say the word complex, everybody thinks you're smarter. It's a consolidation low. In this case, closing here or higher will validate that. but it can still chop around as long as it's below 28.2 and 28.6, right? It's still got room. It can throw closes all the way up there and then put a high below that wick high on a close and put a closing lower, or, a closing high in lower than that wick high. So until you see price clearly break out and close above 28.6, I wouldn't be looking for too much more sustainable to the upside until we see that, right? And we're talking longer term, seeking out that $30,300 weekly above the 29.4 to 5 area. So above there, 30,300's the clearest day target up there, and then it's right back to that prior range where you're going to hear me talking about all those numbers that I talked about for weeks. Your 30,500 to 800, your 30,000, 31,000 to 31.2, 31.5 to 31.8, 32.4, so on and so forth. And so just keep that in mind. And of course, in the Bitcoin in 60 seconds videos, we will go over this as well. If we do see these wick lows taken out, basically somewhere, I would have the monthly alerted at around 27.2. If you see price action there, that doesn't mean that you immediately go short. That means you evaluate what that area looks like when price gets there, and you look at the different indicators that you use. You look at the trend, you evaluate the volatility, you evaluate momentum, and you give yourself the best, most high probability trade. That's what you would take. You don't just automatically long it. You don't just automatically short it. You look at it and you validate it first, and then you choose whether a long or short. Again, this is not financial advice. This is purely observational advice from looking at charts for a very long time. All right, so if we do see this area drop, though, on a close, then we would have a bit of a trend break. Trend break is not a trend reversal. It can still head all the way down here to 26K. Below there, I would still give it room. So if you see 27.2 break, especially on a close, I would be looking somewhere around the basis, which is currently at, we'll call it $27,000. It's probably going to be right around or just below the monthly here at 27.2 at the close of today's candle. Now, I would give it room to the basis, which is currently at 27K, to the weekly at 26,750. Below there, then I would start to target the lower first at 26.4 to 5. Which is kind of cutting across, some of these closes and wicks from the lows. Below there, it's right back to that weekly support resistance area by the lower second standard deviation at $26,000. You can give it room. We see that the lower second is starting to expand down a slight bit to 25.8. As long as it's above the lower second, I wouldn't be looking too much further down, and this would be on a close. We could see wicks below that come into the 25.5 area, provided price even gets there. And then, if we see 25.5 price trading around there, the next available target on the board would be that 25.1 to 24.8 daily support. And if that broke down, we've got that weekly down there at 24.3, and I'd give it some room to around 24.5. All right. Pretty straightforward stuff, to be quite honest. Whatever you do, if you're trading this price action and it's starting to get to you, take a step back from the screen. Most all of you that I interact with on a regular basis understand what it is that you're looking for. You know how to read your chart. You know about trend. You know about divergences. You know about momentum and volatility and all this different stuff. When it's getting too much and you find yourself on the wrong side of the trade too often, as was discussed with a few people today, I will tell you that you need to just step back. It's not a problem with your analysis. It's a problem with what you're doing and how you're interpreting your own analysis, right? Like in terms of your decision making should be binary. It's either you're going to long or you're going to short when it reaches these important levels. Your only job in technical analysis is to identify those important levels. And then you make the decision in real time when it gets to those important levels. So let's go ahead and take a look at the daily setup here and some higher term time frame stuff on CME. This is going to be a big Friday closure for CME. Oh my God, I made a mess of this chart as a joke and I left it, and I have no idea what I've done to this chart. Give me just a moment. Let me clean this chart up. We don't need any of this for CME. We're just going to use our Bollinger Bands, and we're going to use momentum. So we're pushing the upper second standard deviation, and this is what you love to see. This is what Dixie was doing, right? Dixie was just marching on top of that upper first standard deviation, just slowly grinding that upper second standard deviation to the upside. You know, it's funny because as soon as Bitcoin reversed around the basis, John Bollinger got on Twitter and said, I bet you, it looks like Bitcoin wants to just grind that upper second up into that overhead resistance. And that's exactly what we're seeing. I mean, he's the guy who created these. That's where I learned how to use these. Of course, I use a first, second, and third standard deviation, and I do not use Bollinger Band percentage or Bollinger Band width as extra. I use as additional indicators. They're two different indicators. I use Caretaker's BBWP for volatility, and I found it to be wow, this is just, TradingView is not being nice to me today. I hope the stream is okay. You're going to have to let me know in the various streams if you guys can see and hear everything clearly. All right, so BBWP, it's a free indicator by the Caretaker. He gave me permission to use this in the Landy Bands indicator. There's the box. You can see that we have a confirmed, when it's green, BBWP, the box is green. It means that BBWP is over the moving average. In this case, the SMA here. So we've got a 40 over 25 right now. Of course, that's going to keep increasing. You can also get wow, I can't. This is going to be a pain in the butt today. You can also just get the BBWP indicator right off TradingView. It is 100% free. This is going to bug me. All right, so we've got BBWP way up over the moving average, indicating that even on a pullback, this is likely still going to play in the strong half of the Bollinger Bands unless it runs all the way to the other side and closes below the lower first standard deviation and starts pushing that lower second standard deviation. So more bullish than bearish. That's the outlook that this is giving me. And you're probably like, but Landy, momentum is crossed to the downside. Yes, and the pivot is at 28,444, and that's going to keep continuing down if Bitcoin closes below it today. And Bitcoin is currently running against that momentum, so it could very well end up flipping this weekend and bullishly resetting over the weekend. That doesn't mean it's going to, but that's what I would be looking for as a possibility. Now, the big one here is going to be CME's closure. And realistically, in the next 57 minutes here for CME, we want to see CME close above this wick high here. On CME, that wick high is going to be 28,335. 28,140 is the current trading price. So it's a couple $100 below it right now. That is where you want to see it close above. If not, it does still have next week. Even more so, and more bullish in this case would be a closure not only above there, but above the basis band of the Bollinger Bands here, which is coming in at 27,985. So that's bullish. That gives me the bias that this is going to go test somewhere around the close opens here, around $29,000 to the upper first, which just happens to be at 29,800, kind of cutting across the top side of this breakdown candle on the weekly. So a recovery above there. Of course, the upper first gives us the upper second. Where's that? 31,526. That's right around the highs. So it's basically Bitcoin has a shot here. If it closes above the basis, bias is that it's going to go test around somewhere around $29,000 if it doesn't just reverse right from here, right? Now, we combine this with the fact that there is a solid low being put in here on the weekly. This is no small feat. All right. It takes a long time to set a low. We've been waiting a while. So when you see this, which we identified coming into this week, was that we were going to get an initial cross on Stochk momentum. We're likely, seeing as the Stochk pivot is at 26K, we're likely going to see this confirmed today. All right. And that does mean that Bitcoin is more likely to continue to grind its way up. Maybe, pullbacks in between are just fine. And as long as Bitcoin is above this prior low on the weekly, on a close at 25,700, to the wick low here at 24,925 on CME, then this is bullish. Meaning that, yes, price can come all the way back down, even to the wick lows, even this wick low over here, and swing it at 24,745 on CME. It's still bullish. Now, this is very likely going to update and confirm, confirm the cross today. And I would expect this pivot not to change too much. So I would be looking for the confirmation cross here to end up being around this same pivot price and or lower. Maybe if it is a little bit higher, it's going to be in the very shallow $26,000 area. That is an estimation only. We still need to see it close, and then we need to see the subsequent open on Sunday. This would also give me the bias that Bitcoin on spot price is likely to follow through with its weekly cross to the upside. We can see that it does have, this trading view is lagging, and I don't know, maybe I need to refresh or something. But we did see the initial cross on spot price action as well. So the K over the D read, and the D read is slightly pointed up, but this would fully confirm on any closures above 26,133. This pivot should dive to the lows once it's fully confirmed. And that is, that's biased to the upside. Can it still play back down to the lows? Absolutely. Is that a foregone conclusion that it's going to play back down to the lows? Well, the weekly momentum pivot is fighting that narrative in this case. So, I'm not going to say that, anything can happen, but it's more bullish than bearish when you see a weekly cross to the upside. We don't get many. And when we do, we do have many over the life of Bitcoin, but they're few and far between. They're months apart in many cases. So your highs and your lows for momentum pivots. And what a beautiful low that was set here are on the weekly, and we're just awaiting that breakout and close on a weekly basis above that 28.2 wick high. Once that's closed above, it's looking good. All right. Let's see here. Let me go ahead and reload this chart real quick because I am having trouble with the tools here. And it's lagging on my end. Hold on one second. So that reload seems to have done nothing. All right. Awesome. Let's go ahead and check on some of the chats here. If anybody has any questions. Yeah, Dixie did go nuts. I agree. Stream is fine. Okay, cool. As long as the stream is fine, then it's a TradingView issue with. It's been off and on with TradingView for the past couple of days. Anyway, let's go ahead and look at traditional markets very quickly here, as we did have them close, and we see a nice reversal off the lower second standard deviation, and a regain of that lower first. This also, I believe, is going to start turning up on, well, it closed 33, 140 is the pivot, closed about 350 above. Excuse me. I ate lunch right before I came on here and talked to you guys. Yeah, 33, 400. We did hit just under, we hit our 32, 750 area, I believe, or around there, 32, 800. This menu is not doing well. Okay, there we go. We got to 30, yeah, 32, 846. So we were looking in and around this low. That low was tagged, and a little bit of reversal off the lower second. We do see a momentum shift as well, but this is mean reversion. So it's bearish below the basis, of course, which is lining up with this wick low to around the close open. And of course, this next low overhead to the overhead resistance there at around 34,250 to, we'll call it 34,450 or so. You can even take that upper first here. Above the upper first at around 34,550, 560 that I would be looking for to run right back into the range. Test that high a little bit higher up there at 34,789 area, as we do have, all those lower term time frame failures in here. So looks pretty good. Let's see where the weekly's at. We won't, of course, see this update until it opens. There is a bit of a meme trend line here on the weekly that is likely going to get broken. Yeah, I believe this is going to be fully broken when this opens back up. So that, you take it for as you will, but not the best look. It would suggest that this is going to play on the lows a little bit longer from the daily perspective. So in this case, we could see next week, maybe it continues to rally up to, I'd already tested this order block candle right here around 33,500, but it could rally up to this local open high here at 33,800 to 900 around that basis. And, just be cognizant of rejections in that area. Obviously, it's also right above it, rather, there is that $34,000 low right there. So SPY or NASDAQ held up much, much better. Yes, it closed below the low, but it consolidated and pushed right back up, confirmed this low, also filled and closed above this gap and above the basis band. This is looking good for a run up further to around that upper first. It might take some time to get there, but at around 15,000 to 15,300, I think is the next big destination. You can take these order blocks and this low just below that upper first there. Of course, that's still within the range of 15,000. That's at 15,138 to around 15,175 if you want to be really granular with it. But in general, I'd give it room up to around 15,000 to 15,300. And then above there, we're looking at this last breakdown lower high. And that is all the way up at 15,500. Daily supports some more upside above 14,650. That will update to around probably 14,700 to 800. So we'll probably chase pretty close behind price until it really starts to accelerate away. This was a nice close today for NASDAQ. The volatility is, of course, up here indicating mean reversion. Mean reverts back to the basis and is still bearish below that upper first standard deviation as it stands right now. But if it can regain it, then it's looking to probably get a nice rally back to those highs locally. All right, 15,470. This is going to come down some more, and it's up there a bit. I would expect this to be in the lower 15s, upper 14s. Well, it would be in the lower 15s. In fact, it's probably going to be around 15.1 to 15.3 in that area around that daily upper first for the weekly. So it would be a bit of a nice bullish momentum reset on the weekly. Of course, it's got some work to do on the daily when it opens on Monday. SPY, we're looking at a rally right back to our breakdown at around 432. We did not hit, where'd that wick low come in? We hit 420. Yes. I was calling for 420. We hit 420. I don't remember if we hit 420 the last time. When was this? This was Tuesday. Did I stream on Monday, guys? You gotta tell me. I don't remember, to be quite honest. It's been a long week, and then I've been doing a lot of activities with my son at school. So the 420 target has been hit. So again, you know, it's a big support resistance area. Got tagged. That's what we were looking for. And then a move back up. Of course, this is a bearish retest of the breakdown as it stands right now. But back above 431.73, this breakdown open right here. And I would be looking for this meme trend line basis band area around 430 to 435. And then above there, I'd look for a gap fill at least up to like 438 to 440. And yeah, definitely about 430. Yeah, so I would be looking for a test up a little bit further. And it has room to come back down and test the lows here. But the way this closed, even if it tests the lows again, I do think they're going to hold up. And I would be looking for some higher prices around eventually 440 if it can recover above 431 to 432. After that, then we're looking at the next low up here, which is coming into where that upper first is at 440 to 445 or so. Give it some room. The weekly, what did I tell you guys? This is what I was looking for. Granted, this is a downtrending structure on the weekly, so everybody be fair. Be fair to the bears. They have a case, but this also just spiked the lower second standard deviation, which is what we were looking for. That was where the 420 was lining up with support and resistance on the weekly anyway. I'd at minimum be looking for a rally back to the basis, which is right there at 440. If it can clear, of course, this wick high on the weekly, which is around 431 to 432. So all of our analysis is lining up there. Above 450, this is going to come down pretty hard, probably around 435 or so, 440. So if that does get tested, that doesn't mean that it's automatically going to be bullish on the weekly. It does need to turn the weekly momentum indicator back to the upside to give that bias, but it could bearishly retest it as well right there at 440 and get an initial cross up and just continue down. But, you know, we'll cross that bridge when we get to it. So far, nice little rally to end the week, and possibly we'll see that bleed over into the early part of next week. Now, this is being driven by good old Dixie, right? It's all Dixie's fault. It's all Dixie's fault everything went down. It's all Dixie's fault everything went up. All right. That's a falsehood, but not totally inaccurate. In this case, this is a massive uptrend, but also not completely unexpected. When Dixie hit the extremes down here below the lower second and third on the weekly, the natural reaction is a snapback at minimum to the mean, which is always the basis band. And it rallied above and then just kept going, right? Ran the other side. And this is a pretty extreme read. We do have the etchings of an initial cross to the downside on any closures below 106.64 today. And that is going to be in 2 hours and 17 minutes. And this is also painting a bit of a evening star reversal setup. That doesn't mean that it's going to play that way, but it is a setup in terms of candle structure. And when looking at the daily, we are starting to see it finally come back down to the basis again. You know, we did have it come back down to the basis at the end of August, but it spent all of September just heading up without even touching that basis. It is headed back to that area. The basis is going to be right around this prior breakout zone that was perfectly retested at around, you know, this 105. We'll give it some room, 105.5 to, 105.80 area. You can even give it more slush to 106, right? But in this case, I would be looking for it to head down here. We might even see this chop around on the highs a little bit longer. But if we do see this last low taken out, that would be a trend change. And we'd be looking for the next rally to get either a lower high or get continuation down to the lower first at minimum at like 105. So I would not immediately tell you that Dixie has topped either right now. I think we need to see follow through at least next week, right? Then it has probably topped out on the weekly time frame for a little bit. Now, what a beautiful rally, man. What a beautiful rally. There is a way that we can get volume on this as well. And I just got to scroll down the list here. It's not normally charted by myself. No, we're going to go to capital.com. They show volume. All right, so when looking at this on the way up, on the way down, we see that volume started to increase, right? So we have the high put in here. This was a lower high of the downtrend when it tried to rally up off of this area here. So we've got basically we have the area of interest for volume right here, right? And the downtrend, it hits the lower second, puts in a nice bit of volume, and then volume drops pretty dramatically on the rise up. We see a high volume high put in, and then volume drops. We get a bit of volume here that pushes price up, and then we have volume come back in as a rejection. It heads down. We see that it starts to bottom. We see an initial rejection right here at the basis band area. And then we see follow through, low liquidity move up, and then volume starting to rise as it hit this high over here. So it's likely, going to pull back a little bit further here from that perspective. You could also look at this on the weekly, and you can see it much, much clearer. So we see the high volume high. Man, come on. We see the high volume high, and then it comes down and consolidates, puts in a little spike here, this spike high doji. There's two of them. And then a bear hammer on the way down. And then on the way up, you see that volume dropped dramatically until we have this little volume pop on this high. So, what this is telling me is over the longer term, this is in for some consolidation. And I do think that if it was going to scream any further, it's getting really stretched out. 109, I think, is like the max that it could even do if it was going to try to push this further. I think it might be topping on the daily, but we'll have to see how, Monday opens, or Sunday, I should say, when it opens, and then come back to it. So now let's go have a little bit of fun with Bitcoin, because we haven't had enough fun with Bitcoin. I want to call your attention to a few interesting things that you should pay attention to that we don't always talk about, but that I've taught many of you to do. And that is pull a fib. Pull a fib of this move up. If you pull a fib here, you'll see where has Bitcoin been basing on this particular move up. Bitcoin has been basing right on the 618, and it still has room down to the 50%, which is 26,750. And if you've been watching the Bitcoin in 60 seconds videos, and you watched the earlier part of this stream, you'll know that that is a weekly level. And then just below it, we've got the 382. That's the big area below there. Then it's testing the 272 at 26K, 25.9 or so, and then heading back down. So, context is everything. Don't forget your basics. This is something really basic when looking at a retrace. is if it's holding above the 618, it's fine, and it keeps wicking it. So, and that 618 just happens to be 27.2, which is a big monthly level, right? So we have confluences all over the place for this particular price action. Now, we can we'll turn off the bull bands because as I zoom out here, they're going to get all funky looking. We can even take this fib and play with this a little bit more. So from this most recent high to the low, right? So this way, we can see that it basically wicked the 50% fib. Now, you might be saying, well, what about this guy here from the breakdown high, the lower high breakdown candle area? Well, we're running into resistance where at the 618, right? And that happens to be at 28,200 or 28,189, literally catching this initial wick high run back. You can also do it this way. So we are technically just inside of this wider range that was already built back here, starting in March through June. So this was March of 23 to June of 23 on the low. And you can run the fib that way as well, and you're going to come up with just about the same areas. Now, from high to low, you can also see that we can keep that current high, right? And we can bring this area down, and we can see that, where was Bitcoin basing and finding primary resistance, wicks above, wicks below. We had a deviation closure below the 50% of this prior move. But again, it's right around a 618. And we can pull this out even further to the actual low and just check and see where's price playing on this entire move up. And wouldn't you know it, it's playing between the 618 fib and the 786. We did have a deviation, right? And that deviation was holding this low over here that was also a deviation. So until it passed that low, can't really target the 23,600 area, which is right around a monthly close is coming in at 23.3. All right, so fun with fibs. And yes, for those of you that want to do the trend fibs, you will find that there's confluence on the trend fibs as well, but we're just playing in 618 land right now. That's basically every which way you pull a fib. You're going to find that it's landing on some sort of a major 618 area of this particular move of where things have kind of settled in. And, it's not always going to be perfect. It doesn't have to be. It shouldn't be. If it is, then there's then everybody's saying, well, the markets are fixed, and well, then they're probably right. And it's not perfect. We are getting deviations above and below those areas. So at minimum, it's only partially rigged, right? All right. But yeah, so you can also use, just so you know, you can also use the fib and Bollinger Bands as well and see where those major Bollinger Band areas line up with the fib retracements. So, and I do want to point out, before I actually show the Bollinger Bands, which the upper third's coming in at the top side, right? But we have an extension on here, and I want you to note the structure up here. Between the 100%, which is 28,600, there's some pit stops, right? There's 29K, there's 29.4 to 5, and just above there is the 1272. And then cutting right across is that 1414, which is cutting right across rather the lower high rejection that happened at about 30,200, just below that 30,300 weekly. We've got the 1618 up here at around 30,900 to 31K, cutting across these highs. And of course, we've got the 1786, and Torque will be happy, the 1888 right there at the wick. So all very important areas, 618 to 618s and the 786. And we are currently playing between the 618 and 786. if you look at this fib retracement, Torque will also be very happy that the magical 888 is right where this wick high falls as well, at that 28,200 area. So beautiful, beautiful stuff. There was a few additional things that I'm going to throw on here as well. So in addition, we've already looked at bands. You see bands all the time when you're watching my stuff. We can go ahead here and we can throw on some moving averages. So, oh, look at that. It's the 200 EMA 200 SMA holding price action down. But I want you to note what's going on down here. Bitcoin is trying to change this trend. So back test of the 9 EMA down into where the 21, 55, and 200 EMAs are all clustered together. Not abnormal at all, especially, you got a lot of people shorting off the daily 200 simple. And in this case, much like I had mentioned on the weekly, when it broke below the weekly 200 simple, we can see that, it was bias once this flipped to the downside, but that wasn't until we got down here. So we see that the trend is trying to change itself in terms of EMA position. The 21 and 55 are above the 200. And if Bitcoin does rally above and really take off to the upside, I like my 200s, right? I'm not looking for full trend to be hit until this 200 white 200 EMA is back above the purple. That's where you're likely going to see consolidation around these highs before some sort of breakout, if and when it gets there, at least from this current position. When looking at the weekly as well, I'm going to tell you that, there are certain analysts in this world of YouTube that are very, very popular and have built their entire career around an EMA cross. And they use it, in my opinion, in the most asinine way possible. You can figure out who I'm talking about. But basically, we have on the weekly, Bitcoin still playing off that 200 weekly EMA. It is currently finding resistance at the weekly 200 SMA as well. So until we do see the 200s flipped, so 200 EMA above that 200 SMA, I would still favor, very heavy overhead resistance on any rallies. But I would not necessarily be looking for everything to fall apart either. We can see that the 21 EMA and 9 EMA are right on top of each other. At weekly close, this would not be the best looking candle, by the way, on the weekly, as it would be looking very much, if it closed like this, it would look very much like a evening star reversal setup. But in this case, the setup is not there because momentum is coming off the lows. And it is still mean reversion on the weekly until we see it back above the Bollinger Bands basis, which is the 20 simple. Okay, so 9 is likely going to tick up over the 21 on the weekly by Sunday. If Bitcoin can close here or higher, you want to see Bitcoin close above that basis band, which is at $28,000. We'll call it. It's 27,975, very similar to CME. And then again, I would be favoring a move back to that upper first overall or in general. Yes, there can be pullbacks in between. It's about closing above this area here, getting above last week's close, and then pushing up, right? Pushing up above this week's wick high, and especially getting closes above that 28.2 now, as that is been the primary area of resistance so far in the shorter term timeframes outside of the deviations. So that I think that's all I wanted to touch on for today. So if you do have any questions, I'm just glancing over at the various chats right now. Sorry about the silence there for a minute. It does get a little awkward. I agree. Awkward silence. Yeah, you guys can basically chat with me in real time, but the other guys over in YouTube, which I have not looked at in a while, cannot. So let me throw on the music again, and we're gonna start wrapping this up. I'll try to answer questions for you if you have any. So let's go ahead and get some background music while I read through the chat a little bit here. All right. Let's throw it on the fun chart. We covered a lot today. Yes. I covered a lot of different stuff. Kind of all over the place, right? That's okay. Yeah. If you need to rewatch, it's okay. Yeah. No worries. So let me go ahead and take a look in the YouTube chats. Yeah, I see. You guys are gonna. So I'll say goodbye to you guys over there that are leaving the shop. Yeah, you guys are wrapping stuff up. A few guys are probably gonna have to stay back. Yeah, for post-market setup. Cool. All right, cool. Yep, just let me know. All right, and let's see what YouTube is doing over here. Stream is fine. Da 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 da. Hello, Ivan. All right, so let me look and see who's here. Hello, Jedi. Bobby. Mr. No Name. Cheryl. Ivan. And I see quite a few others that are not chatting here, but hello to everybody. Ivan. Good. Glad to hear, Ivan. Good job. I did stream Monday. Well, Mr. Jedi, I like I said, it's been a long week. I've been doing a lot of stuff with the boy. He had some stuff even today. He had his school had their fun run, so myself and my fiance were there as volunteers to help out. And Bobby didn't like something I said. I must have you'll have to tell me, but what, judging by the timestamp, that must be when I pulled the fibs. You're like, oh shit, I didn't check it, is probably what that is about. Mr. Jedi said he's gonna go fib himself. All right, so what's my opinion on total 2 or total 3? You know, I would generally be okay. Yeah, probably is confirmed that his damn it was right when I talked about the fibs, because he probably hasn't pulled a fib in a while. Let's see what total 2 is doing. You know, we had some important areas on the breakdown and the breakdown retest. It's kind of a big zone overhead. As long as it's above 1 trillion and this last low, 980 billion, you know, it's fine. It's got a double bottom there. Just, you know, it looks like Bitcoin. Go figure. You know, daily's headed down. I'm not concerned about that. Two days headed up. That's in mean reversion. It was trending down pretty hard. 3 days headed up. 4 days headed up. 5 days headed up. Yeah, weekly is also headed up. So weekly is likely going to, it's likely going to get its initial cross to the upside. Does that mean that it's, you know, destined to, you know, moon? No, but I would favor a move up a little bit further over the course of the next week or two. At least judging by the early etchings of what's going on here. Now, the daily is not awe-inspiring, obviously. It is on momentum, not looking great, but it's also higher low territory until it takes out the wick lows at 105 trillion. So, 1 trillion and 50 billion. That's kind of what I'd be keeping an eye on. If it does take that area out, then I'd be looking back to the lows at about 1 trillion even, right around the wick lows here. But yeah, I mean, it's not doing anything too crazy. If we throw this freaking microphone, this microphone stand, they all have springs, right? And the spring is really tight on this one, so I like lower it to where I want it, and then it just slowly starts creeping back up, even with this freaking. Hold on. All right, I just got to keep locking that thing down, but then it creaks like crazy. All right, let's go ahead and take a look at bands, though. Yeah, looks fine as long as it's above the lower first. And at this point, on the daily, we do see a flattening of the lower second, which, it's right on the wick. It's right around the lower second, so it could come all the way back to the lower second and be fine. So about 1 trillion. As long as it's above 1 trillion, it's fine. And weekly's still in mean reversion. Yes, is it a bearish retest of the basis so far with a big old bear candle? It's not a big candle, but a decently sized bear candle here. I would, first pass rejections are normal at the basis. First pass rejection when approaching from the bottom bands, first pass, held support, when it's coming from the top side. So this is nothing abnormal. They were positioned down. We see the bands flattening out on the weekly. This is setting up for a range. Could it break down? Absolutely. Again, same kind of wick low for the weekly, this double bottom wick low area where there's also a close. So you kind of have three main taps here. So this actually is worth marking, this close open structure and just making sure that we can identify that this is an important area. It doesn't, for total market cap, it doesn't have to exactly stay above that support, or break down below. But there's also a little close open just below that has wicked into it, so you can make a zone if you want. I mean, it's basically 970 billion to 983 billion is that zone. As long as it's above there, I mean, this has basically got a triple bottom, and I would expect it to consolidate sideways and up over time. Pull a stinky linky and just go sideways forever. Just ding dong, bing bong, bing bong. So yes, I'm gonna make stupid sound effects premium subscription. I'm just kidding. Oh no, you're saying you want to give me money for it? You stupid. All right. Yeah, I don't see. I don't see anything too concerning just yet. So just kind of settling in, trying to change its trend overall. I mean, the longer this goes, and if this puts in a nice low here, it's likely that this $750 billion market cap is going to be the low. Total 2 looks like the weekly wants to head up. It's essentially the same look. It's just consolidating within a tighter range. We've seen a lot of wicks coming in around this same area, and it has room even down to 482 billion. So it's got room down there. I have no concerns about this above, about 482 to 495 on total 2. Weekly's about to cross back up. I would say that this would probably be a solid cross. The first time that it tried to cross up, it was coming off an impulse through the lower second and third area. went back, mean reverted, and this time it found support on the lower second. So this to me tells me that Total 2 is trying to change its trend on the weekly. Doesn't matter. It doesn't mean it's going to be successful, but 495 is the number to maintain. 546 is the number to beat. That's the basis. It's coming in right around this order block candle at 551. And above there, I'd be looking for this thing to run to about 570, 575 to around 600 billion again. And that would look pretty good in the alt markets. Total 3, I mean, Total 3 is the one that's a little bit more concerning if it were to break the lows, but when taking into account Total 1, Total 2, and Total 3, I think that it looks just fine so far. This is a typical trend change type of move. So as long as it's above 320 now going forward, which is a regain of this initial sell-off wick low over here, right into that lower second, it bounced back up towards the basis. Tried to hold this area, tested the upper first bearishly, and then right down through the lower second and third. Again, found support in that same area on a lower low, but we're talking about the lower second in this case. And then it ran to the other side, basically double topped, and then came right back down. Another impulse through the lower second and third, came back down, and now it's just kind of basing off of that lower second standard deviation. Back above the basis at around 333 billion, and you can probably throw on, you know, another 20 billion or so to 350 at the upper first, maybe 30 to the upper second at 360 billion. Weekly 333 is the number to turn the weekly back up, so it's not looking the same, but 5 days nice and turned up. We don't see any volatility expansion yet because it's mean reverted right back to the basis band, so it needs to get above there to start actually looking like it's going to make a run to the upside. As for the daily, it's the same look that we're seeing across the board in crypto markets. It's not bearish, it's not bullish. It's fairly neutral as it consolidates on its local highs here. Local high zone. Oh, what a mess of wicks, man. What a mess of wicks. Still, it's in higher low territory. If it can put in, if it can actually close above 333 billion, which is right around that upper second, that would set in another higher low, and I would be looking for it to run around, 350, 360 over time. And then Bitcoin dominance. Let's take a look. Oh, hey, look at that. That one line to rule them all, which, by the way, was from over here. It was the rejection. Bitcoin dominance looks like it wants some ups. So, yeah, Bitcoin dominance does want some ups. I don't know why it's messing with this blue and red line here, but either way, above 50.32% on the daily, looking good for expansion here above that upper second on both the daily and the 2-day here. Very nice. And it's got some room, nice little bullish reset of momentum there on the top side. 3-day still headed up above 50.25%, and it's pushing. This was a bit of a consolidation range that it set up here, and you can see if it pushes the upper second and closes above this last high, then we're targeting, probably 51.1% to this high at 51.7 to the actual highs here at 52.2. And above there, it's going to go for a run, probably like 55%, 56%, and then we come back to it. 3-day looks good. If we can close up there, it's looking like it's going to keep heading up. Argument to be made on the 4 and 5 day, I imagine. 4 day only. Inverted head and shoulders. Doesn't mean anything, as I've said. Not a pattern trader like that. I will point them out every once in a while, but it's a 4 day. It's not a common time frame. 50%. Looks good. You know, we have compression on the 5 day here. If we see a close above the upper first at, that's 50.68%. If we see a closure above there, you're going to see bands flatten out on the 5 day, right? And then we're looking to wherever that upper second standard deviation is. And it's around that 51 and a quarter, coming in at 51.3%. And the weekly should be still headed up. Yep. And the upper first right here is at 50.82%. So above there, and a close above the 50.75% high. And I would be overall from the weekly looking for a run to that upper second around 51.75 to 52%. And the weekly agrees. Closes above 50%. So, yeah, looks good. Looks good for a little bit more. Now that can cut one of two ways. You know, Bitcoin can still rise. Just that, excuse my yawn. Bitcoin just, you know, will be beating the majority, not all, but the majority of its altcoin pairs. That's all. But yeah. Anybody have any other questions? Comments? Suggestions? I can hear the music a little bit in the background of my headphones, even though they're technically muted. And I don't have monitor mode on. And this song, I think, is a little annoying. Shall I change it? I'm going to be heading out anyway, but if you do have any questions, go ahead and leave them in the chat there. Those guys over there. Okay, you guys are leaving the office. All right, take care, guys. Have a great weekend. And then for you guys in the public chats here, any questions, any comments? Something you might be a burning question you've been waiting to ask me. Now is probably the time. Take a little sip of water here. No problem, Bobby. I won't be doing that, Jedi. Yeah, I'm sorry, buddy. I won't do that. Otherwise, the stream would never end. I mean, if I was like one of those video game streamers, maybe we would do that, but no one wants to sit and watch me really chart except crazy people like yourselves. Like, if this is entertainment, then you are the hardest of the hardcore in the game when it comes to this stuff, right? So, but there is the DVR feature is enabled. YouTube, they call it DVR feature. So you can always roll it back midstream. Of course, you won't be up to date with me asking questions in the chat, but you can also always just roll it back and watch again. Or skip to the parts that you missed, as it'll immediately be available. Not in the highest quality, because it still has to like go through and like get the best quality version that it's being recorded on the server side up. But yeah, T-Gens assemble. Yeah, basically, there's not many people here on a Friday. There's a lot of people that I'm seeing in the YouTube stream, but I get a lot of people that bounce in and out quite often. And there's only really the core of you guys that actually jump in and chat. I think a lot of people don't, they come in, they just want to observe, see what I'm about, what I'm talking about here, probably say I'm dumb and then move on, which is fine, because I'll just say I'm dumb, but I'm usually right. And it's not because I'm always going to be right, but we have some sound best practices in place. So you're allowed to toot your horn a little bit when you are correct. And when your system, is really sound, you're going to be correct much more than you're going to be incorrect. So, but remember, for those of you, if you're ever having trouble, you need to understand that you see me talk on the Bitcoin in 60 seconds video. Okay, target hit, and then here's this and this and this and this is what I'm looking for, and this and that. And you're like, well, how is he calling the target so accurately? It's not magic. It is a binary opinion based on what price is telling me, right? So price is telling me that if it gets to this level, it's going to go up if it can get above it. If price gets to a different level on the downside and it breaks through it, it is going to continue down to the next level. It's a binary option, right? So when you hear me call out in the Bitcoin in 60 seconds videos, I say, like, Bitcoin, came down and bounced off the monthly support at 27.2, traded back above 27.5, and then traded up to the weekly at 28K. These were all targets that I talked about. And it's because Bitcoin fell below 27.5, so where's the next big area? So all your job is, as an analyst, is to identify those big areas. Well, it's the monthly at 27.2. It's also where all these wicks are coming in. So if it does get below there, then we look to the next big area. And that's always, in the way that I do the analysis, is the basis band. In this case, it's right around 27K. Below there, next biggest area is the weekly. The weekly, there's the basis is lining up with these closes over here. The weekly's just below, was a rejective area. 1, 2, 3, 4 wicks on it. You could call that a fifth. That's a weak wick. There's 5. There's a wick right there as well. So 26,750. Below there, we look to the lower first. Lower first has confluence with all these highs. Right around 26,405. Below there, we've got a 26K wick low right into the weekly at 26K by the lower second. It's all just confluence. If it holds it, great. But below there, then we're looking further down. Above here, then we're looking further up. So if it was above 26K, then I'm favoring a run back to support resistance around 26.2 to the lower first at 26.4 right? So you just do it the other way. It's super simple. It's horizontal support and resistance on the higher time frame to lower term time frame areas will always get tagged when you're local to them, and then you can define criteria based on that. If you move through that level, you're just looking to the next level. It's not magic. Anyone can do it, even you. And if you're getting frustrated, just remember that. Pull back, reset, go back to your fundamentals. You were probably overcomplicating something, or you were trying to trade a bias. You never trade a bias. I don't care, bear market, bull market, you don't trade a bias. You trade the chart, you trade your levels. Everything else is just confluence. 4 main key pillars to trading: trend, right? Support and resistance, volatility, and those 3 create momentum. Right, so we've got trend, which is our uptrend right now. Can't fight the trend. Trend is your friend until the end of the trend. And then we've got support and resistance with all the different levels, right? So support, resistance, trend, support, resistance. We have volatility. This is the band volatility. It's rising because it is above the basis. It is pulled away 1 standard deviation away from price action, almost 2, by the upper second. So volatility is increasing, and that is the driver of momentum. And you might be saying, but momentum's pointed down. But it is shifting momentum. It is the driver of momentum. This is just confirming that what you are seeing. It's a lagging representation of close over close momentum. So naturally, this is going to shift back to the upside on any closes above 28,245. Currently, price is trading at $28,000. So in this case, it's indicating that it's going to shift to the downside. Let's look at the advanced Stoke, which I'm not concerned about. It's in the bullish control zone. Anyway, let's take a look. Advanced Stoke, that's RSI. That's not what I want. Let's look at KVDB's advanced Stoke, and that's from app.crowntrading.net. I have no affiliation, but I love their indicators. Yeah, green DMI, $28,000 is the pivot. So it's just getting a little goofy on that one indicator. This is a little bit cleaner. So basically, $28,000 is the pivot. Close below, it's going to continue with its downside momentum on the 15-minute. How about we look at the daily? It is correct, 28,200. So it's likely going to see a downside cross, and oh my God, there's a lower. It's a lower high on the Stoke momentum indicator. It's gonna crash. No, that doesn't mean anything. Doesn't mean anything until we take out the last low. And right now, it's a little far away from that. So give it some time. Also, when it's setting a higher low, you just gotta wait it out. Sideways consolidation chop, and then come back to it later. Sound good? All right. Cool. Well, I will let you guys go. I want everyone to please have a wonderful weekend. My cough is still sticking with me, and my apologies again, but have a great weekend. And, I appreciate everyone for doing your part when you are watching the Bitcoin in 60 seconds video, seeing a lot more likes coming in. That is helping get it, recommended to new audiences. And again, all my content's free. I don't want anything from you guys. I will never ask you for anything, and there's some really cool stuff coming. Again, we are still working on the Discord thing. We might have to explore a different platform for our community. So if you also have suggestions for other platforms for our community, please let me know. You can just @ me on X or Twitter, whatever you like, and strike up a conversation. DMs are getting turned off on that platform pretty soon because I'm just being inundated with spam from all over the place, and they're kind of sophisticated spammers and scammers. So, and it's every time I interact with a bigger account. So I prefer that you @ me in public. Just @CryptoLandy, and suggest something or strike up a conversation. I would be happy to chat with you on there. But you have a wonderful weekend. Have a wonderful morning, afternoon, and evening. Oh God, friend tech. Anyway, don't get me started because I'll rant on that one. But you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out.
has announced that a flying disc has been found and is now in the possession of the Army.
CBR